Hey everyone, and welcome back for another deep dive.
Yes.
You know we love to go, Duncan. Today,
Absolutely.
we're going deep on credit default swaps,
Right.
or CDS,
CDA?
and we're going to be looking at how these play out,
Okay.
specifically in Chicago's commercial real estate market.
Interesting.
So this is going to be hyper-local,
Very hyper-local.
but
It's also a pretty complex topic.
it is.
And so to help us navigate these sometimes choppy waters,
Right.
we have the insights of Michael Linton.
Great.
Now, Michael's a seasoned commercial broker here in Chicago.
Yeah.
He's been doing this for decades.
Wow.
And you can actually find all of his insights at his website, chicagodealflow.com.
I'll have to check that out.
It's a fantastic resource.
Cool.
So I'm really excited to kind of
Yeah.
unpack his perspective on this.
We too.
Now, CDS, I think a lot of people, when they hear that term,
Cool.
it can sound a little bit intimidating.
Yeah, it sounds like Wall Street, you know?
It's exactly.
Big money.
Yeah, and it kind of is.
But we're going to break it down
Okay, good.
in a way that makes sense,
Right.
especially if you're investing or developing property
Okay.
here in the Chicago area
Yeah,
or, in the surrounding suburbs.
right.
Because understanding CDS can really give you this interesting glimpse
Okay.
into kind of like the underbelly of the market.
Okay.
Like you can see which markets are considered risky,
Oh, interesting.
how these big players like REITs,
Right?
how they manage their massive portfolios,
Yeah.
and even how you might structure deals
Yeah.
to kind of address these underlying risks.
So it's like a powerful tool, even if you're not using it directly.
Exactly.
I
Exactly. You never even have to buy or sell one of these things.
got it.
But just understanding the concept can give you a real edge.
Interesting.
Yeah, in the Chicago real estate market.
Okay.
So let's start with the basics.
Okay.
What is a credit default swap?
Yeah. What is that?
Because I think a lot of people, their eyes glaze over when they hear that.
Yeah, for sure.
Yeah.
It's a mouthful.
Yeah.
It's a mouthful.
Yeah.
And finance can be a little jargon heavy.
It can.
At its core, though, a CDS is kind of like an insurance policy
Okay.
for loans.
Okay.
So let's say a bank lends money
Right.
for a big development project.
Okay.
They're a little worried the borrower might default,
Sure.
right?
Especially with everything going on in the world today.
Especially today.
Yeah.
So the bank can actually use a CDS
Okay.
to transfer that risk of default to someone else,
To like another party.
to another party.
Interesting.
Usually it's an investor
Okay.
who's willing to take on that risk
Okay.
in exchange for some potential profit.
Okay. So it's like they're saying, hey, we'll pay you a fee
Exactly.
if you take on this risk
Yeah,
that this loan might go bad.
exactly. That's the gist of it.
Okay.
And the investor, on the other hand, is essentially making a bet
Okay.
on whether the borrower will, succeed or not.
Right.
If the borrower defaults, the investor has to cover the losses.
Oh, wow.
But if the loan performs well,
Okay.
they get to keep the premiums.
Okay. So it's a little bit like gambling,
It is a little bit.
but with more information.
Yeah, well, hopefully.
Hopefully.
There's definitely risk assessment involved.
Yeah.
But it's about understanding the underlying assets,
Okay.
the borrower's creditworthiness,
Okay.
the market conditions.
Makes sense.
Yeah,
Now, Michael Linton, he's been, watching this play out
he's seen it all.
in Chicago for almost 40 years.
Wow.
And he's identified 3 main ways that he sees CDS
Okay.
being used in Chicago.
All right, so these are trends that shape the entire landscape.
Yeah, he's not just talking theory. He's seen these deals go down.
Right.
And the first one is protecting lenders.
Okay.
And these mega developments that you see popping up all over the city,
Yeah.
especially downtown Chicago or in those booming suburbs.
Right. Think about the scale of some of those projects.
Yeah, we're talking skyscrapers,
Skyscraper.
massive retail complexes,
Yeah.
huge
Mhm.
mixed-use developments that span entire city blocks.
That's a lot.
These are not small potatoes.
Hmm.
And the loans to finance those are equally massive.
I can only imagine.
So it makes sense that lenders would be looking for ways
Yeah,
to manage that risk.
for sure.
So by using CDS, lenders can effectively reduce their exposure.
Okay.
If a project goes south,
Right.
they're basically transferring a portion of that risk.
So it's like a safety net.
It is a safety net
Right.
for those lenders.
Interesting.
And it can make these big projects more viable,
Yeah.
right? Both for the developers and for the lenders who fund them.
Right. So it actually contributes to the growth of the city.
It does, exactly.
Wow.
It keeps those projects moving.
Interesting.
The second way that Michael sees CDS being used
Okay.
is in managing the risk of these huge real estate portfolios
Okay.
that are held by REITs.
Yeah, REITs. Those are the big guys.
The big guys.
Yeah.
They own so much property.
Tons of properties, especially in a city like Chicago.
Yeah, where you've got such a diverse range of property types
It's great.
and neighborhoods.
Yeah.
And because they hold such vast portfolios,
Right.
they're exposed to all sorts of risks.
Yeah, you've got market fluctuations.
Yeah,
Property-specific issues.
absolutely.
So CDS becomes a tool for them to fine-tune their risk profile.
Okay.
They can hedge against specific risks,
Okay.
balance their portfolio as a whole.
So it's more strategic
It's very strategic.
than just reacting to risk.
Yeah.
It's about managing it.
Yeah, they're adjusting their exposure based on market conditions.
Wow.
It's pretty sophisticated stuff.
It is.
And that's one of the reasons why CDS has become such a prevalent tool
Yeah,
in the institutional real estate world.
it makes sense.
Yeah.
And finally, Michael points out that CDS is also used to protect
Okay.
investors who are buying distressed properties.
Okay.
So those properties, it might be a bit of a gamble.
Right, but they could have big returns.
Yeah, exactly.
Higher risk, but potentially higher reward.
Right.
Now, distressed properties
Yeah.
can be attractive because they often come at a discount,
Right.
but they also carry
Yeah.
a higher level of risk.
The previous owner might have defaulted.
Yeah.
You might need renovations.
Mm-hmm.
The local market might be struggling.
Yeah, you just never know.
It's a gamble.
It is a gamble.
But for those who are brave enough,
Right.
CDS can act as a sort of safety net.
I see.
It allows them to mitigate some of that downside risk
Okay.
so they can chase those higher returns.
Makes sense.
Yeah.
So we've got lenders,
Right.
we've got REITs,
Uh-huh.
and we've got individual investors all using CDS
Wow.
in different ways, but all kind of with that same goal in mind.
Yeah.
Managing risk.
It's all about risk management.
Understanding those potential downsides.
Yes,
And finding ways to protect yourself.
for sure.
But here's the question.
Okay.
Does this all mean that CDS is inherently a good thing? That is the question.
For the Chicago real estate market.
Right. Is it always good?
Or other potential downsides.
Yeah. Is there a dark side
Don't even consider.
to CDS?
Yeah.
That's a great question, and it's one that I think deserves
Yeah.
a deeper dive.
I think so.
So what are some of the concerns that people have raised about CDS?
Yeah. Let's unpack that a bit further.
All right, let's get into it.
Okay, so we've established that CDS can be a bit of a double-edged sword.
It can be.
It can help get projects off the ground and manage risk,
Right,
but it can also be used for speculation.
right,
That might not benefit the market as a whole.
right. Exactly.
But how does this translate into actionable insights
Okay.
for someone who's actually involved in Chicago real estate,
Yeah.
whether they're buying or selling or developing
Uh-huh.
or just trying to understand the market better?
Right.
Like, how can we actually use this information
Yeah, that's what I want to know.
in a practical way?
Okay.
And this is where understanding the information
Oh.
that CDS activity reveals
Okay.
becomes really powerful.
Okay.
Michael emphasizes this. Even if you're not directly trading CDS,
Right.
you can learn a lot
Okay.
by observing the market.
So you're saying watch what's happening.
Watch what's happening.
Okay.
Think of it like this CDS pricing
Okay.
is like a giant mood ring.
A mood ring.
Yeah, reflecting the collective sentiment
Okay.
of investors.
Got it.
So it's not just about individual deals,
Right.
but about getting a sense of the overall market psychology.
Oh, that's interesting.
Yeah.
Okay.
So for instance,
Yeah.
if you see CDS prices
Okay.
rising sharply
All right.
for retail properties
Okay.
in a certain area,
Okay.
it suggests that investors are getting a little nervous
Oh.
about that sector.
So that's like a red flag.
It's a red flag. It's a canary in the coal mine.
I see.
It might be an early warning sign
Interesting.
that something's amiss,
Okay.
even if the traditional indicators haven't caught up yet.
Wow. So it's like a leading indicator.
Yeah, exactly.
Interesting.
So someone looking to invest
Okay.
in a shopping center
Right.
in that area might want to proceed with extra caution.
Yeah, for sure.
Right.
A lot of due diligence.
A lot of due diligence.
Yeah.
Exactly. And CDS pricing can provide
Yeah.
this
God.
layer of insight
Right.
that you wouldn't get
Yeah.
from just looking at vacancy rates
Right.
or rental prices.
It's deeper than that.
It's deeper. And D, it gives you a glimpse
Okay.
into what the smart money is thinking.
Oh, wow.
Yeah.
That's cool.
It's like having this secret window
Okay.
into the minds of those big institutional investors.
I like it.
And that information can be really valuable.
It can be.
And you're making decisions
Right.
about where to invest your money or what kind of development projects to pursue.
So it's not just for the big guys.
No, it's for everybody.
Everybody can use this information.
Yeah, exactly.
Right.
Michael also talks about how CDS can influence financing strategy.
All right, not just for developers.
Not just for developers, but for anyone looking to get a loan for a real estate project.
Right.
So if you understand how lenders are using CDS to manage their risk, you can structure your deals in a way that addresses those concerns.
Okay, so you got to get in their head a little bit.
You got to get in there. You got to think like a lender,
Right.
for example.
Yes.
If you're trying to get financing for an office building,
Okay.
and you know that lenders are particularly worried
Yeah.
about the office market right now.
It's been shaky.
It's been a little shaky.
Yeah.
You might consider offering additional collateral or guarantees to make that loan more appealing.
To sweeten the deal.
To sweeten the deal, exactly.
Yeah.
So it's about being proactive
Right.
and anticipating the lender's concerns.
I see.
Yeah.
Got it.
It's about understanding their perspective
Right.
and finding ways to align your interests.
Yeah.
And knowledge of CDS can be really valuable in that process.
So it's like you're speaking the same language.
Exactly.
Okay.
You're speaking their language. You understand the factors that are driving their decision-making.
That's smart.
Yeah.
I like that.
Like learning the rules of the game.
Right.
So you can play it more effectively.
Exactly.
And the more you understand those rules, the better equipped you'll be to navigate the complexities of the Chicago real estate market.
So we've talked about CDS as an early warning system.
We have.
We've talked about it influencing financing strategies.
Uh-huh.
But Michael also highlights its role in revealing broader market trends.
Yes, he does.
This is where it gets interesting.
It does.
So by tracking CDS activity across different sectors and geographic areas, you start to see patterns emerge. So for example, if you see CDS prices rising for office buildings in the Loop, but remaining stable for industrial properties in the suburbs,
interesting.
It tells you something about how investors are viewing those different sectors.
So it's not just about individual properties. It's about understanding.
It's about the bigger picture.
The bigger picture, yeah.
The relative attractiveness of different asset classes.
Exactly. CDS pricing can help you identify which areas of the market are considered hot and which are cooling down.
Right. Are they getting nervous about a certain area?
Exactly.
Got it.
It can also reveal emerging trends.
Right.
Like the growing demand for logistics space.
Okay.
Or the increasing popularity of mixed-use developments.
Yeah, those are hot right now.
They are hot.
Yeah.
It's like having a heat map of the entire Chicago real estate market.
I love that.
Yeah, showing you where the action is and where the risks are.
That's great.
And that kind of information is invaluable for anyone who's serious about investing in real estate.
For sure.
It helps you make more informed decisions about where to allocate your capital and what kind of returns you can realistically expect. So even if you're not directly trading CDS, understanding its dynamics can give you a significant advantage.
A leg up.
A leg up, exactly.
In the Chicago real estate market.
In the Chicago real estate market.
I like it.
It's about being informed.
Yes.
Being aware. And being able to connect the dots between these seemingly disparate pieces of information.
It's all connected.
It's all connected.
Yeah.
Now, I know we've been focusing on how CDS can reveal risks and opportunities.
Right.
But are there any specific examples?
Oh, I like examples.
From the Chicago market that illustrate
let's be specific.
These concepts in action?
Okay.
I'm glad you like examples because I have one.
Great.
And that is the recent development boom in the Fulton Market District.
Yeah, Fulton Market, that's hot.
It's super hot. This area was once primarily known for its meatpacking plants and industrial warehouses.
It was gritty.
It was gritty.
Yeah.
But it has undergone a dramatic transformation.
It has.
In recent years.
It's correct.
High-end hotels, restaurants, office buildings.
All the cool stuff.
All the cool stuff springing up.
It's definitely one of the hottest neighborhoods in Chicago right now.
It is.
Yeah.
And that transformation was fueled in part by the availability of CDS.
Really?
Developers were able to secure financing for these ambitious projects by using CDS to mitigate the perceived risks.
Yeah, because it was still kind of a risky area.
It was a risky area. It was in transition.
Right.
So they used CDS to basically say, hey,
Yeah.
We're going to protect you.
To the lenders.
To the lenders, exactly.
Interesting.
So CDS helped to jumpstart.
So it was a catalyst.
It was a catalyst for the revitalization of an entire neighborhood.
That's amazing.
And as the neighborhood has flourished, we've seen CDS pricing for properties in Fulton Market decline, reflecting that reduced risk perception.
So as the risk goes down...
As the risk goes down...
The price of the CDS goes down?
The price of the CDS goes down, exactly. Okay. So it's this virtuous cycle.
A virtuous cycle.
CDS helps to unlock investment, which drives development, which in turn reduces risk. And attracts more investment.
So it feeds on itself?
It feeds on itself.
That's cool.
And that's just one example of how CDS can shape the urban landscape.
It's powerful stuff.
It is powerful stuff.
Yeah.
Okay, so we've seen how CDS can be used to manage risk.
We have.
Identify opportunities, and even influence the development of entire neighborhood.
Whole neighborhoods.
But what about the individual investor? Someone who might not be involved in these multi-million-dollar development deals.
Right, the little guy.
The little guy. But is still interested in making smart real estate investments.
Absolutely.
In Chicago.
Right.
How can they use this knowledge of CDS?
Right. What can they do?
To their advantage.
Yeah.
That's a great question.
It is.
And it's one that Michael addresses directly in his work.
Okay, good.
He emphasizes that even small-scale investors can benefit from understanding CDS dynamics. For example, if you're thinking about buying a condo in a particular building, you could look at CDS pricing for similar buildings in the area to get a sense of how lenders and investors view the risk.
So you can see what the pros are thinking.
You can see what the pros are thinking, associating with that type of property.
So it's like doing your due diligence.
It's like doing your due diligence, but on a more sophisticated level.
I like it. Yeah.
It's next level.
It's next level due diligence.
Yeah.
Exactly.
Okay. It's about going beyond the surface.
Right.
And looking for those subtle indicators that can reveal hidden risks or opportunities.
Got it.
And how about someone who's looking to sell a property?
Yeah.
Can CDS pricing be helpful in that context as well?
That's a good question.
I think it can.
Okay, how so?
So if you're trying to sell a property and you see CDS prices for comparable properties declining, it might be a sign that the market is cooling down. And you might need to adjust your pricing expectations accordingly.
So you don't want to overprice it?
You don't want to overprice it, exactly. On the other hand, if CDS prices are rising, it could be a signal that demand is strong, and you might be able to command a higher price.
So you can kind of time the market a little bit.
You can time the market a little bit.
Interesting.
Yeah.
Okay.
So it's about being aware of the market sentiment and using that information to your advantage, whether you're buying or selling.
So knowledge is power.
Knowledge is power in real estate.
Yeah, it really is.
Absolutely.
Okay.
And that's the beauty of CDS.
Yeah.
It provides this window into the collective wisdom of the market.
I like that.
Yes, a window that can be incredibly valuable.
It can be.
For anyone who's involved in real estate.
Okay.
Okay, so we've covered a lot of ground here.
We have.
But I think there's one more crucial aspect of CDS that we need to address. Especially given the current economic climate.
Right, with all the uncertainty.
All the uncertainty. Yeah. And that's the role that CDS might play in shaping the future.
Oh, the future.
Of Chicago's real estate landscape.
The crystal ball.
The crystal ball.
Oh, I'm ready.
So we've talked about how CDS has influenced past and present trends.
Right.
But its impact on the future is perhaps even more intriguing.
That's the exciting part.
It is exciting.
Yeah.
So with interest rates fluctuating and economic uncertainty looming, how do you think CDS will factor into the decisions being made by developers, investors, and lenders in the years to come?
That's the question. Yeah, that's the million-dollar question, isn't it?
It is.
And it's one that Michael was with his deep understanding of the Chicago market, he's particularly well-suited to address this.
Yeah.
So interest rates are fluctuating. The cost of borrowing goes up. Lenders are getting even more cautious.
Makes sense.
So CDS could become an even more crucial tool for developers to secure that financing.
Yeah, to get those projects off the ground.
To get those projects going, especially in areas where the market might be softening a little bit.
So CDS could be the key to keeping those cranes in the sky.
It could be.
And those construction crews busy.
I think so.
I think so, too. Now, as for specific areas or property types, I think we might see increased CDS activity around those sectors that are most sensitive to economic shifts.
Makes sense.
Like office space, retail, even hospitality.
Yeah, those are the ones that tend to feel the impact first.
They do.
Yeah.
So for our listeners, keeping an eye on CDS activity in those areas could be like a sneak peek into what the future holds.
A crystal ball.
A little crystal ball.
Yeah. What should they be looking for?
What are some of the specific things they should be watching for?
So one key indicator is the spread.
The spread.
Which is essentially the price of CDS protection.
Okay.
A wider spread means it's more expensive to buy protection.
Okay.
Which suggests higher perceived risk.
I see.
So if you start seeing spreads widening for office buildings in a particular neighborhood, it could be a sign that investors are getting a little nervous.
They're anticipating a downturn.
They are.
In that market.
Exactly.
So it's not just about whether CDS is being used. It's about the price.
It's about the price.
Of that protection.
That tells the story.
It tells the story.
Another thing to watch is the volume.
The volume.
Of CDS trading.
Okay.
If there's a sudden surge in the volume of CDS contracts being traded on a particular asset, it could be a sign that something's brewing. It suggests that investors are either getting really worried or really bullish.
So increased volume, whether it's buying or selling protection, is a signal to pay attention?
It is. It's like seeing a flock of birds suddenly change direction. It might not tell you exactly what's going on.
But it's a sign.
So something's up.
It's something's happening.
Exactly. And finally, I think it's important to pay attention to who's involved in CDS transactions.
So who are the players?
Who are the players? Are they hedge funds? Institutional investors? Are we seeing more participation from traditional lenders and developers?
So that can tell you something as well.
It can, Are more people getting in the game?
Are the big guys playing, or are the little guys starting to get involved as well?
Exactly.
That sounds like it could get pretty complicated to track, though.
It can be, especially if you're not deeply embedded in that world.
If you're not a Wall Street wizard.
It
can be tough to keep up with all of that.
It can, but there are resources available to help you stay informed.
Like what?
Well, Michael's website.
ChicagoDealFlow.com. Great.
That's a great place to start.
It is.
He provides regular updates on the Chicago real estate market.
I love that.
Including insights into CDS activity.
That's a great tip.
So you can stay up to date.
For our listeners.
Yes.
Don't forget to check that out. So while CDS might seem like a complex and even esoteric topic, understanding its basic mechanics and the signals that it sends can be incredibly valuable for anyone involved. In Chicago real estate.
Absolutely.
It's about developing a deeper understanding.
It is.
Of the forces that shape the market.
Yes.
Forces that are often hidden from view.
They're behind the scenes.
Behind the scenes.
But they have a real impact.
But they have a profound impact on prices.
They do.
Investment decisions, and even the physical development of our city.
It shapes the skyline.
It shapes the skyline, exactly.
Yeah.
Okay, so we've journeyed into the world of credit default swaps.
We have.
Explored their use in the Chicago real estate market.
We did it.
And even peered into the future.
The crystal ball.
To see how they might influence the city's development.
It was fun.
It's been a fascinating deep dive, wouldn't you say?
I completely agree.
It has been.
And I think we've managed to demystify this topic.
I think so.
Make it relevant for our listeners. Whether they're seasoned investors or just starting out.
Absolutely. And a huge thank you to Michael Linton.
Yes.
For providing the insights.
Absolutely.
That guided this exploration.
He's the man.
He is the man. His expertise and on-the-ground experience have been invaluable.
Invaluable.
And don't forget, his website, chicagodealflow.com,
the resource,
is a treasure trove of information.
It is.
For anyone who wants to stay informed about the Chicago real estate market.
Absolutely.
He also offers consulting services.
Does he?
If you're looking for personalized advice,
okay,
you can reach him directly.
All right.
At area code 312-612-1031.
Don't forget that number, folks.
Write that down.
It's like a direct line.
It is.
To one of the smartest guys.
To one of the smartest guys in Chicago real estate.
And Chicago real estate.
And remember,
yeah,
even if you never directly trade a credit default swap,
right,
the insights you gain from understanding this market can give you a significant advantage.
Absolutely.
It's about reading the signals, anticipating trends, and making informed decisions.
That's how you win.
That's how you win in real estate.
Yes.
All right. And on that note,
we'll
wrap things up for today. Thanks for joining us on this deep dive.
Yeah, this was fun.
Into the world of credit default swaps.
Until next time.
Until next time.